All right. Thank you, everyone, for joining today. Vaults are the star of the show, obviously. We've been talking a lot about the technical intricacies of the tech. This time, I would like to take a higher level view and tackle the Vault topic under a business challenge. How can Vaults solve solution for traditional actors? How can it be a catalyst for broader adoption and democratization of decentralized finance? I'm Stephane. I'm the Chief Marketing Officer at Enzyme. We've been pioneering the space of Vault since 2017, and I will be drawing from these 8 years of experience building in the space to moderate this chat. But the real stars of the show today, they are right next to me. Perhaps you guys could take just a few moments to introduce yourself as well as your company.
I'm Severin, heading business development of 21X. 21X is the first regulated exchange and settlement system for tokenized securities, enabling atomic swaps against stablecoins.
Hi, I'm Jess. I'm the CEO at WalletConnect. WalletConnect is a network of now over 700 different wallets and about 70,000 different projects. And on the wallet side specifically, we've seen big growth over the last year with institutional solutions, custodians joining the network. So I'm excited to chat today.
Hi, everyone. I'm Ash. I'm from Chainlink Labs. So Chainlink is a connectivity layer between blockchains and other blockchains or off-chain systems and on-chain systems. Excited to be here.
Fantastic. Thank you, guys. I would say that 2025, and you could agree, and everybody in the attendance could agree, has been a pivotal year for decentralized finance in many ways. At Enzyme, from our vantage point, we are seeing more discussions coming from traditional types of actors, truly interested in what they could do in that space. It's not just curiosity anymore. It is a rare will to push things forward and to develop new tokenized ventures. But in the meantime, we've also seen, those recent events. Obviously, we're talking a lot about stream finance, but there has been also some technical issues with protocols, the balancer exploits that still show there are some cracks in this industry, whether it comes from human oversight or tech. So from this, I would like to just start this discussion by getting your feeling where you think this market is at the moment, where do you think we could go, and what role Vault could play in this movement and in this convergence with TradFi?
So from a capital markets perspective, what we at 21X are seeing basically is that TradFi is moving to wallet rails. So wallet infrastructure will be the new account infrastructure for traditional finance and capital markets. We also see the same thing happening from the stablecoin side, as with the large stablecoin adoption currently, also driven by the US now. The payment layer of capital markets will move to stablecoin rails. And on the other hand side, this is where 21X comes in quite handy, is that the asset layer, so what we've seen from largest asset managers, we heard Fasanara before, we heard Acred Apollo, but also BlackRock with their Biddle fund, their money market fund, Franklin Templeton with Benji. We see that from asset management perspective, financial securities are moving on-chain as well. And given those three trends that we've been watching for the last, in my case, 6 years, we always knew this is going to happen, but actually currently the technology is there, the adoption is there, and also the regulation is there. And vaults, in my perspective, bring that asset management layer and the portfolio management layer to tokenized securities.
You mentioned wallets. I think, Jess, you know a thing or two about wallets. What is your view here?
Weirdly, I've never actually built a wallet, but we work with lots of them. And I think we've seen a few really interesting trends. If I look back, and I joined the company about 2 years ago, if I look back, almost all of the wallets that we worked with on a really active basis were the mobile wallets that you all carry in your phones, right? Trust, OKX, MetaMask, those were the biggest wallets that we typically work with. And they still have a really big presence on the network. But the only institutional type wallet that we had at the time was Fireblocks. And we saw a lot of volume coming through the network. To give you an idea, today this year we will do about $400 billion moving between apps and wallets via the WalletConnect network, and about 65% of that is wallets moving funds in and out of DeFi. So it's really, really substantial. And what we have seen, having spoken then with a bunch of custodians over the last 18 months, is that 2 years ago, they were really in the position that most of their customers just wanted to hold crypto assets, and that was it. They would I'll put my Ethereum in this safe place, and it's with a custodian, and that's great. We've seen such rapid change during that time where those customers, those end customers, now want to do things. They want access to more exotic products. They want to be able to stake those products. They want to be able to participate in governance and all of this sort of stuff. And so we've been working with them to integrate WalletConnect so that they can do that in a way that is a single integration. They don't need to go and make bilateral integrations with each of those partners, but that still gives them a lot of security, because the biggest question is, okay, do I let my, TradFi, not so crypto savvy customer who's got a lot of crypto in a vault or in an account with me, do I let them loose on all of DeFi via WalletConnect? And what we've seen is a real spectrum from those who have taken that approach and said it's at your own risk, you can do what you want with those funds, to actually what we're going to do is really curate the DeFi protocols and the staking protocols that you can access. So when you log into your custodian account, you'll see just a choice of 5 or 6 of each of these kind of buckets. The tech is still the same. It's still via WalletConnect, but a much more curated approach. So I think we're seeing these kind of different paths in that way.
Fantastic. Ash, I'm sorry, you have the worst role, being the last to talk. What is your view on the market?
To be honest, I'm very excited. What we see from Chainlink's vantage point is there's a lot of institutional capital coming into the space, and this is creating interesting challenges for us to solve. So there's the data aspect, but there's also the compliance aspect. For a long time, compliance kind of has existed on the UI level in DeFi, but to really take our industry from $100 billion to tens of trillion, this compliance layer has to go to the smart contract layer, whether that's on the token, on the vault, etc. And so in this world, the vaults act as a capital efficiency tool to be able to take these assets and give a better return on investment than they would off-chain. So you have for example, for a money market fund, you might have the fixed rate yields off-chain, but then in DeFi, you have additional yield. And so this has to be secure, compliant, and high enough yields for institutions to want to come into our space.
Fantastic. About the role of vaults, it feels like it's moved from a really hardcore DeFi types of use case and protocol, and moving into something that would be more potentially programmable and used as a vehicle to power any kind of traditional types of use cases when it comes to finance. I'm not really a fan of the vault terminology. I find it somehow limiting, and this is not how we envision vaults at Enzyme. We want them to be kind of flexible and power any kind of tokenized instrument, from funds, structured products to ETPs, but this creates a lot of challenges from a technical perspective. And the reason why we wanted to have you here on stage with us is because we need to be able to rely on trustworthy partners to build an all-around infrastructure. Just one of the key issues that we identify when it comes to Vault Tech is something that is often actually under-prioritized. It's the investor experience, and how we can onboard new types of people who are not savvy, not educated, and provide them with a seamless way to access those decentralized strategies. Would you agree with this as a potential one, if not the main blocker for institutional adoption? And what is your point of view when it comes to how WalletConnect could solve those issues?
Yeah, I think it's definitely not the only blocker. I think that there's still a whole bunch of things that we need to solve, but user experience is a really important one. And at WalletConnect, we view user experience as being quite broad. So for us, that covers security. Do I feel comfortable interacting with this? Is it easy for me to interact with it? And is it intuitive just from a UI perspective? And how flexible is it? How much do I need to become have specialist knowledge in order to use this? And our belief is that On the security side, that's just a no-brainer. So we have programs both on the wallet, and now I'll give you the alpha is that we announced this on Thursday, but we're announcing app certified as well. So these are programs that both on the application side, and that's a very broad term, but on both sides of the network, we have a certified program, which means you can go through a QA process with us, you register your details with us, and that shows it's part of the user experience. So when I connect my wallet to one of our verified dApps, it will show you in the wallet the gold tick, like this is a verified application. So that should just be a seamless part, and there's a whole load of things that go underneath the hood, verifying the smart contracts, verifying the domain addresses, but those should be just an intuitive part of the user experience. Similarly, I think when we often in crypto assume a level of technical knowledge, and I think it's completely unrealistic for us to think that everybody in TradFi is going to learn how crypto works in order to be able to use these products, and that's just completely the wrong way of thinking about it. So we really take the approach of what do they actually need to know, and what can we abstract from that? And I think stablecoins is a really good example. Severin touched on the payment rails, which is where we're doing a lot of work at the moment. The idea that an end user even needs to know what chain their asset is on, or even, I can't use my PYUSD, but I can use my so-and-so USD because there's now 800 different types of USD. All of that we have to abstract away. So we have to stop using that terminology that requires people to get up a learning curve. And when we expect institutions to interact with vaults, we have to do that in a way that speaks their language and is intuitive and easy for them. And sure, the chains, all of this might be an important part of it, but they shouldn't need different experiences for different chains.
Makes sense. You mentioned that it was not the only blocker. I would say that another blocker is the kind of strategies that we can propose to those types of investors. And we imagine that the first use case that will be reassuring for many of them is having off-chain strategies being wrapped into some kind of tokenized vehicle. From a manager standpoint, it creates complexity, data, NAV calculation. Ash, we announced last week the integration in Enzyme Onyx of Chainlink runtime environments, which is supposed to solve this. Can you tell us a little bit more, and particularly the use cases it unlocks?
Yeah, for sure. So I think it was about 2 weeks ago at SmartCon, we announced the Chainlink runtime. So the Chainlink runtime basically takes all of the Lego blocks of Chainlink, so you have compute, data, cross-chain, and allows developers to basically build their own workflows using all of these Lego blocks and write to any chain that CRE is deployed on. So from like a asset manager standpoint or a risk curator standpoint, something that they can do is now spin up their own oracles. So you can use the same infrastructure that has secured DeFi for the last 5 years, I think like 70, 80% of DeFi, to build your own oracles, to push NAV, to vaults, PORs for showcasing that the asset is reliably backed. But you can also build, you can also take a lot of the state management associated with the vaults from current centralized servers into CRE. And so this is a very powerful tool that now Chainlink is pretty much given out for everyone to use. And what we see is that these different stakeholders that directly are responsible for the price of the asset are able to provide a new service directly to these institutions. So going to your point of how can we take some of the work from the institutions, this is one of the capabilities that CRE is enabled. And then on top of that, the first product we built on CRE is something called ACE. So ACE is a solution that compiles 3 products: CCID, a cross-chain identity protocol, policy manager, and a reporting function. So 3 products within one solution on CRE. And what this enables is the asset issuer to take the existing compliance policies with the existing vendors, SumSub, Persona, TRM, chain analysis, etc., and use the API keys to push attestations from the existing compliance vendors on-chain. So every time a transaction happens, every time the asset moves on-chain, there's a verified check that enables that is basically permissioning the asset to go to person A, to go cross-chain, to be deposited into a certain vault, Or on the flip side, when these assets have utility in a lending market, the borrow side, right? Who deposited the USDC or the stablecoin is also in following the policies of the asset issuer.
Fantastic. It is really this kind of integration that will unlock new types of products, particularly with broader types of strategies that could be across on-chain, obviously, opportunities, but also off-chain. Yeah. It also makes Vault somehow and Vault share some kind of securities in a sense, depending on the strategy that is underlying. Obviously, tokenized securities is something you know well, Severin. Do you think that Vault shares could at some point become a standard that would be powering potentially like settlements and trading infrastructure like yours?
Yes, so I see the vaults as basically similar to a traditional fund currently, so managing different underlyings on chain. And as those become tradable, you speak about the trading, matching, and settlement layer, and you need a market infrastructure for those. So current regulation, depending on the underlyings, under MiCA in Europe, for example, you would look at this as crypto assets, still requiring some licenses. But when you package like RWAs, like tokenized securities in those vaults, you definitely tap the regulated securities law, which means that you need a regulated market infrastructure where you can trade and settle those assets. So at 21X, we're the only exchange currently which is fully non-custodial. You can connect your WalletConnect solution. With WalletConnect, you can connect your Fireblocks wallet, get on-chain price streams from Chainlink, and trade tokenized securities atomically on-chain in one single transaction. And this is basically the user experience from DeFi brought to TradFi in a fully regulated space.
I'm very embarrassed because you just did the conclusion I had in mind. So now I will have to think of something else. No, thank you very much, guys. I would love to keep talking, but we arrive at the end of this panel. Would be happy to meet you guys and have a chat after this. Thank you very much for attending.
Thank you.
And see you soon.
Thanks.